Taking a look at the charts, we've got equities trading slightly higher, all up about 1/3% this morning. We've got, so money's flowing into stocks. It is flowing out of the dollar, out of gold. So we're going to see the markets open higher. We're going to be closing out our SSO position with the band strategy. So the higher open is ideally what we want, so we can get a better fill on our position. It's up about 6% from our entry price, and we'll be closing that out. Now with our CGS strategy, we're going to be closing our SPY position. I've provided you with our next trade alert with our targets and stops through the alert last night, and again followed up this morning in our morning report. So if you are a member of our CGS strategy, you'll be getting into a new position here at the opening bell for this market uncertainty that is about to start. Let's take a look over at gold real quick. If we take a look at the chart of gold, we've got it had a nice pop there yesterday. The whole precious metal space had a nice pop. And if we take a look, you can see here that nice move up yesterday. Everyone seemed to get really overly excited about gold in miners yesterday. If you see here, it had a move up. I think the gold miners ETF kind of show a bit more of a pop and give it more of a visual of the emotions that it sparked with people. You can see we got this pop in miners. And of course, it's got everybody saying this is the start of the big rally. Gold's on its way to 3,000 and miners are about to take off. Keep in mind, this is just a one-day pop. It really doesn't mean a whole lot at this point, and it is clearly in a downtrend right now. So don't get overly excited with a one-day pop. I know it's nice. People who own it want to see it go up, but the reality is it's an oversold bounce. It's just short covering, and people moved into a defensive play yesterday. Our strategy is saying, hey, the stock market signal is over, and other people, I think, can see into that signal as well with their different types of strategies, and people move to defensive plays, which is the dollar, gold, miners, and they all moved higher yesterday as that defensive play. So that's kind of where we are. We'll just have to see how this plays out, and if it's going to like build a base or rep higher and create a strong momentum move. But don't get too caught up in a one-day pop. The trend is down. Not a big fan of that. And obviously, we want to be investing our money into things that are trending higher, not trying to pick a bottom and getting excited about a big bounce in the precious metal space. Remember, some of the biggest bounces typically happen in a downtrend, and some of the sharpest pullbacks happen in an uptrend. So that's how the market throws a lot of people off. If we go and take a look at our hot list, what's interesting is most of the sectors are risk off, meaning people just aren't willing to put money into those sectors. They're not very aggressive. The short-term trends are almost all down except for the ARKQ ETF, which is still a short-term uptrend. And most of the other sectors have a longer-term bearish or distribution topping phase forming, meaning there's selling taking place and money rotating out. And this is obviously not a very good sign if the stock market is not going to go higher if most of the sectors are trending down and money's flowing out of them. We can see the indexes down in this bottom chart or this bottom table here. They're all risk off. Nobody wants to be in stocks. Their trends are down and there's distribution selling going on. Of course, all of this analysis is kind of done behind the scenes using all kinds of different analysis and money flows and all that stuff to give us that insight. Last but not least, just looking over at the QQQ, we had an exit on this trade about a week and a half ago, 2 weeks ago. That is not a good sign. NASDAQ should be leading the way. NVIDIA should be leading the way if this market was strong. Semiconductors should be leading the way. And the NASDAQ rolling over was our first kind of warning sign. We hit our target at 10%, closed out a chunk of our position, and got the rest out up here. And if we go and take a look over actually at the semiconductors, we can see they're really not performing well at all. They've just been lagging and flatlining. This is, you could argue this is a bit of a complacency type of move, that this it's just not finding any traction. And it could be the world's ugliest kind of head and shoulders formation. We won't know until it happens, but we got a shoulder, we got a head, and then we got this broken limb, which if it starts to break down, this could be very, very ugly. Obviously, there'd be a massive neckline across here, and that means a huge unwinding event to the next level where it consolidated down into this range. So obviously, if this happens, the markets are going to go into a tailspin, a nosedive, a waterfall sell-off. And if this was the sell-off this much, we'll probably see precious metals get hit very hard because this will be panic selling. People will be liquidating and getting out of most assets in general. Anyways, other than that, that is about it for this morning. We'll just let the market do its thing. If we look at the long-term trend, let's just clean this up real quick. Take a look at the long-term trend. It has not changed. We had obviously a sell signal. Markets were down in 22. Then we had a new bull signal. The trend is still up. This is still a pullback and correction. It can still work itself out. This market could continue to go still a lot higher. Again, it doesn't matter which way this market goes because we follow the trends. This is a long-term trend, and it's important to just let long-term trends unfold and do their thing. This has a huge benefit, which is something I'll be getting into later here in January. But obviously, huge potential move, one easy big trade to the upside. And I'm going to share some really interesting and exciting news that we'll be implementing to our CGS strategy, our asset revesting strategy, early here in 2025 for our investment accounts. Anyways, that's it for now. Talk to you soon. Bye-bye.